Hey, good morning. Let's go over today's trade plan. So in the overnight session, we had resistance at 1931 quarter, and we saw that the market rejected right around there, and then ended up making another low, which was the high probability trade idea heading into the overnight session and heading into the current day. We got a pretty extended move down towards 1910 half, and then that's where responsive buyers stepped in, and at this point, ES is balancing within the overnight range on the non-farm payroll number, on the employment situation. But heading into the open, there are still several econ reports that are scheduled. We have PMI manufacturing index out at 8:45 a.m. Central, consumer sentiment 8:55 a.m. Central, ISM manufacturing index at 9 a.m., construction spending at 9 a.m. So we still have several econ reports in the first half hour, which can just add to the already decent volatility that we're seeing in the market. So it is going to be important to really pick your spots even more so, and just be really aware that this is a high volatility, high momentum market. So you're getting good rotations, on first test of the zones, but it is important to kind of gauge which side the momentum is leaning on, and read the market in real time, and then decide whether a fade setup makes sense at that zone, given how the zone's being approached, given just how much underlying momentum there is at that time. Heading into the open, we're going to be watching 24.75 to 26.75. That's a key area to just establish short-term directional bias. We know that overall, this market is weak, and any retracement into yesterday's range can offer good location to sellers. But if we start holding above 24.75 to 26.75, then it would just tell us that short term we could go higher and test 29.5 to 31, test the overnight high, and beyond that 33 to 35, and then we have really strong resistance at 37.75 to 40.75. So that's something we'll have to gauge in real time, whether there's enough momentum to go up there. Right now the market's weak, and we are going to be focused more on the short side. We can consider long setups, but we really want the market to be stretched and exhausted heading into a support zone in order to fade this market. Buying it near the overnight high, or even at 24.75 to 26.75 is a risky trade, because at this point we've seen that this market is in liquidation mode, and we can expect volatility and two-sided trade, but the safer ideas are going to be on the short side at the resistance zones, ideally first test of the resistance zones. On the downside, 12 to 13.5 is a pre-market support idea. So if we head down there, after the open, first test, it can attract buyers. Below that, we have initial support, 06 quarter to 08 quarter. It's the bottom of a previous, short-term balance area. And then we have 1904.75 naked VPOC under that. The really big support zone at this point, the major support on the downside is 1888 to 1890. That's the top of a previously pretty well established balance that we broke out from, and that's the next kind of strong support area that the market can potentially test over the next several days, but that's the next big inflection point. Now that doesn't mean that intraday we can't find buyers at some of the earlier support zones, right? We've already seen that we had support at 09.5, and in the overnight session we got a really decent bounce off of 10.5. So coming down into this, even the 06 quarter to 08 quarter could actually shut off the selling. But if you really zoom out and look at kind of what's the big picture inflection point from this point forward, that's down at this 88 to 90 area. But the market certainly doesn't have to head down there just in a single day. We're already down pretty decent from yesterday's high. Yesterday's overnight high was 65.5. We went down to 10.5, so it's already a really big move. And at this point, the market could be just short-term exhausted and oversold. So we could still head down and test 12 to 13 half, oh 06 quarter to oh 08 quarter, but at that point, especially once the econ reports are out of the way, there may not be enough downside left in the market, at least short term on the day time frame. Bigger picture, this could still be heading lower, but short term on the day time frame, you could be just short term exhausted, and there may not be a whole lot left in it. So once we start heading down to 12, 13 half, oh 06 quarter, oh 08 quarter, or 1975 to 0275, if any of those support zones get tested, then we can expect responsive buyers to be active at those zones, but it is going to require some timing in real time. It is going to require reading the market in real time and just gauging the momentum. I think fading the zones when the market is short-term exhausted and really stretched into a zone is still an idea that can work out really well. And with the added volatility, you can get some really nice reactions on first test of the zones. And initial support does have that potential to reverse the market, but we are going to have to see how that zone gets approached, because we have the overnight low at 10 half, and oh 06 quarter, oh 08 quarter is just right below that. So we're just going to have to watch and see kind of how that zone gets approached, and if the market balances, for example, for a couple of hours ahead of it, then we want to be careful fading it, because you could get an extension down to 0475 or 1975 to 0275, and then that ends up being the reversal spot for a bigger move, back into the overnight range. But overall, the idea is that if we end up, holding above 24.75 to 26.75, then we know that the market is kind of just stabilizing a bit, and it could go up to 29.5 to 31, 33, 35, and then the stronger resistance 37.75 to 40.75. Now this is the unlikely scenario. Given how weak the market is, it's unlikely that we're going to break out above the overnight high. So we are going to be more focused on the sell side. On the downside, 12 to 13 half is a downside objective, an area that could relatively easily get tested on the day time frame. 06 quarter, 08 quarter is also an area that has potential to get tested, and we can expect buyers over there. We are running on high volatility. You're probably going to have to widen up your stops a little bit to accommodate that, or just be very selective on trade location if you still want to use tighter stops. So then you can focus on entering at the edge of the zone, and that can allow you to use some tighter stops. But given the volatility, I think it makes sense to expand the stops by at least a point or so. So I think 3-point stops, 3.5-point stops are probably going to be a safer play today, instead of trying to go for those really tight stop losses. Unless you're just very selective with trade location, then you can probably get away with using a 2 or 2.5-point stop. So those are the main ideas heading into the day. Let's see if the sellers can continue to be dominant on the day time frame, and let's just be mindful of all the econ releases out in the first half hour, and we'll take it from there.